Hello. You're tuned into Spicy Takes and Tax Breaks. I'm your host, Aubree, aka the Write-Up Queen. The crown isn't just a vibe. Promise you it is earned after so many beatings. But today we're diving into 10 of the most jaw-dropping questions I've had from clients recently, but are write-offs people actually claim on their taxes oftentimes. Whether you can pull them off legally or not, end up with an audit letter instead if you're not utilizing it correctly. So from yachts, RVs to ever iconic Birkin bags, we are separating the strategic from the scandalous. Grab your calculator or your cocktail because this one's going to be fun, spicy, and definitely financially enlightening. Depending on where you're at in your life, you can take advantage. Again, keeping receipts is compliance, creating wealth is strategy. So let's be real. Every single business owner has asked the question at least once, can I write that off? If not more than once. And thanks to Instagram gurus, internet mythologies, and a lot of help from ChatGPT, the answer often sounds like a big flashy yes, even when it's absolutely a no, or vice versa, leaving you in the gray. Here's the thing. The IRS isn't really here for your hype. They're here for your receipts, logs, and a legitimate business purpose, which creatively and very, very legally can often be done for your current lifestyle. Today, I'm here to walk you through what works, what's legal, what's risky, and how to keep your tax strategy spicy without ever being scorched by the IRS, even if they come knocking. So, true story, a client once asked me if they could write off their Vegas wedding as a networking event, or creating a new business to say, hey, maybe we'll do wedding event and then closing it after. Unfortunately, no, spoiler alert, but there's a million things you could do in between and or after even to support that. Let's start big. We'll go into boats, yachts. Yes, the IRS does allow deductions for boats, believe it or not, but only under certain slippery conditions, to be honest. If your boat is used for business more than 50% of the time, you can deduct things like fuel, insurance, slip fees, maybe even depreciation under Section 179 or a bonus depreciation schedule, depending on what it's being used for. So if you're a charter captain or actually closing deals on a deck, doing major advertising on there, this is for you. But let's be honest, if your business use is just Cousin Greg or Bob tagging along to fish and pitch an Etsy shop idea to you while you're out, it's probably a slippery slope I would recommend against. That's not going to cut it if the IRS asks you any questions about it. I did, though, once have a client who hosted quarterly networking events on their boat. Every single attendee was logged based on the calendar invite they sent out. Also, every event had an agenda. And guess what? It's actually perfectly legit in that circumstance. Another one of my favorites is RV, mobile type tax deductions. So rolling write-offs. If your RV has a sleeping, cooking, and bathroom facility, it can qualify as several different things. We'll jump into the first one, a second home. This means you can deduct your mortgage interest on this RV. And if you also use it for business, traveling to job sites, let's say, trade shows, mobile services, a rolling photo shoot stand. Now you can stack deductions as well on this. Mileage, depreciation, parking, maintenance, upgrades even. But again, clean records are the key here. You need some sort of a business plan, proof of the use. It can be realistically, depending on how we're structuring it, written in your own name or the business's as far as proof of title. And the IRS is not necessarily impressed by your Yellowstone trip just because you took one Zoom call from the RV. So we want to make sure to be a little bit more detailed in where we're going with that. Again, another option for this would be, hey, I want to do mobile podcast services. Even if you're your only client from one company to another, it's a great way to get started out and seeing what's next. Birkin bags, designer drama, my favorite Chanel. So this one makes people lose their minds. Can you actually write off a Birkin bag, a Louis, a $4,000 blazer, pair of Louis Vuittons? Technically, yes, but it has to be exclusively used for business or somehow directly tied to income in a monetary value sense. So an example, if you're a fashion influencer, that Birkin bag that you just bought is monetized in all your videos, your affiliate links, your brand deals. So it absolutely is going to qualify here. But if you're buying one for branding to walk into every office meeting you go to, there's no revenue or ROI that can be attached to it. I'm impressed. Congrats, you just bought yourself that beautiful audit magnet. I want one too if you want to buy your accountant one. But realistically, that's not the strategy behind this. I did have a client, though, once who pulled this off. Designer bags featured in every piece of content tied directly to revenue reports. She had me detail them quarterly for her, better yet. But realistically, the IRS can't argue with receipts and the results that come behind that. There's so many different things. Let's go through sales tax on big purchases. Here's one people miss all the time. If you itemize, you can deduct either state income tax or sales tax, whichever is higher based on the limits we're looking at. So if you live in a no income tax state and you buy, let's say, buy a 150K RV, that sales tax could be your golden ticket to deduction, even without bonus depreciation. But be careful, it's either this or that. Please do not double dip. Again, pick your poison, document it, see what benefits you best based on buying power needed for future or where you're at in current life. My Section 179 superstars, bonus depreciation, are one of my favorites. Again, 2024, we can deduct up to 1.22 million in qualifying business equipment, including SUVs, trucks, RVs, some cases watercraft. Again, catch, must be used more than 50% business. We'll drop a freebie in the bio here so you can download it to see really what that qualifies as and what would be needed for documentation. But realistically, if your G-Wagon is just for date night and brunch, it's not really deductible, even if you want to call it deductible. If it's your daily client hauler or mobile office because you work in your car between meetings, we're talking huge deductions and 100% depreciation. There's so many more, but really let's do a speed round of maybe 5 or more spicy deductions before people can forget about all of this. It's a lot of information all at once, but MBAs, courses, hugely deductible if they improve any sort of current skills, even if it's not a career change or for yourself or an employee. An additional home office on a boat or RV, it's your main place of business, it still does count. Again, we'll drop that in the link for more information, but hobbies turn into businesses. Golf, art, gardening, you're doing carpool for the mom group each week. Profit motive at all, entity setup, expenses are now deductible even without the revenue coming in. Meals on board. So you're in town, you're traveling, dinner on a yacht, 50% deductible. Date nights, sushi cruise, talking about your future love babies, no. But date night sushi on a cruise with your wife, who's also now your board member, or you're talking about business future, absolutely deductible. Donations. There's several different things we can do with donations, which unfortunately we will have to wait till the next episode to fully go through. But appraisal over 5K, most things, even if it's hey, we're getting rid of this personally, but somehow we can tie it to your business, a lot of that can be a full deduction. Whether that's a watercraft or something different, it's there. So, can you write off a boat, RV, Birkin, Louis Vuitton? Yes, but only if it's legal. Let's strategically document it. Let's make it part of your business. And again, not that hard to do, but let's not be someone who doesn't. The write-off queen's rule, if it walks like a duck, quacks like a duck, it's typically a write-off. You still need to prove that it swims like a business asset, though. No shady deductions, TikTok hacks. Let's just do strategy and make sure it's done right moving forward. If you're curious about what you could be writing off, worried about what you've already missed, or maybe already crossed the line on this year, we should definitely talk. At the Write-Off Queen and Spicy Takes and Write-Offs, we offer write-off audits and strategic sessions to keep your books clean and your deductions spicy. Let's talk more. I can't wait to talk with you. Also, make sure to check out the bios and the links because we have all the free downloads there. Thanks for listening. Again, spicy takes and tax breaks. I'm Aubree, the write-up queen. Next week, we're tackling one of my favorite hot takes, how rich people pay less in taxes lately. Make sure not to miss it. Follow below. Remember, taxes are not a punishment. They're a playbook. And here, we are here to play to win.